The U.S. Federal Reserve's landmark decision to increase short-term interest rates is considered a game-changer in a world of abnormal monetary policies. Shin Se reports on how central banks around the world are responding to the Fed's rate hike.
With its rate liftoff, the U.S. Federal Reserve has opened the floodgates for a shift in the world economy. Following a rally in global stocks, central banks elsewhere followed suit with rate hikes, starting with the Gulf nations. 4 of the 3 Gulf Arab states, Saudi Arabia, Kuwait, and Bahrain, reacted within half an hour of the Fed's announcement, raising 0.25 percentage point, matching the Fed's move. The United Arab Emirates, too, climbed on board the rate ride upwards. The immediate response came from the tendency of oil-pumping states to shadow movements within the U.S. as their currencies are pegged to the greenback. In Asia, Hong Kong, which has its currency also pegged to the dollar, also lifted its base rate by 25 basis points, putting it at 0.75%. On the other hand, Indonesia and the Philippines both kept rates steady. Ahead of the Fed's decision, Korea froze its benchmark rate at a record low of 1.5% for 6 straight months.
Korea should not be rushed into changing its course of economic policy despite varying monetary policies around the world. But it sure has to monitor further movements like the Fed's future gradual rate hike and the indirect impacts stemming from the liftoff on emerging markets.
Experts add that although Korea's current low base rate is considered sufficiently accommodative, the Bank of Korea may be forced to reverse gears sometime mid-next year, depending on the pace of rate adjustment from the U.S. Shin Se, Arirang News.